Okay. So as we can see on 50 index from the
Please
24
hold on. Let me
hour,
not reduce the volume of this TV. Ima, give me the remote of that thing.
from the
Reduce the volume for
24,
me.
24 hour on 50 index, we can see
Yes.
that we have been bearish from last year, December, up to now.
Yes.
So that is the first thing we have to take care of. The second thing is um, this derive trading view is not showing all the data, but there were some old all-time lows below somewhere here that it took out, but it's not showing. It shows on my MT5, it doesn't show here. So that with that said, it means that price took out old swing lows or long-time swing
Okay.
lows. But what is the most important data we have right now to make a decision if we want to trade? So right now, I can see that we have price hitting this area and rejecting. And then the rejection gave us a swing low that has been formed on the daily time frame. So for a swing low to form, we learned we know that we need to have about three candles that come together, three or four, where we'll have for a bearish side swing low, we'll have a low, a lower low, and a lower high. Okay, so these three group of candles on a daily time frame is confirming for us that we have a swing low formed. But notice the candle with the lower high, or mostly the candle with the lower low, should likely or should better engulf the first candle with the low. Okay, it should engulf this candle. And we can see that the third candle here did that job for us, so it engulfed it, which means that we have a change of character. Okay. Now,
Exactly.
with this change of character, it's moved up again and then took out even the high and closed above this candle. So this pattern here is a confirmation that we have a swing low formed on the daily time frame. Now, the other thing is that we saw that price pulled back after that change of delivery of and then it's moved up to the upside, breaking structure. So now we have break of structure. We have change of character and we have break of structure. After the break of structure, price pulled to the downside and then swing to the upside here and then pulled back into this area of imbalance, fair value gap. We have a low here and a high here that give us this space and pulled back into
Yes.
this area of imbalance and also gave us a change of character. And let's notice that the candle of this last green or bullish candle, this bullish candle after the break, after it broke, it closed above. Okay, it closed above the high. Okay, it did not reject inside, it closed above it. This is a better sign. It's a sign that we are likely to go more bullish. But normally,
Exactly.
when there is a break of structure, there has to be retest or there has to be pullbacks. Okay,
Yes.
so we expect that there should be a pullback on 50 index. And if you look at the current daily candle, it's it's still
Perish.
it's not close yet, but it's working within a bearish move. So what can we see around that area? What is the data on the daily time frame? So we can see also like um we can see like a swing high being formed here with this candle as a high and then the bullish candle as a higher high, and then this bearish candle gave us a lower high. Notice it did not take it out. So this
Yes.
group of candles is forming a swing high. So what is the condition that we have to see? If this bearish candle is able to close below this bullish candle's body, then there is a change of structure, or we are going to say we are likely to have a change of structure. And if it's able to trade to take out the low, okay, then if it's able to trade to take out the low, no, if the bearish candle closes below, that is a better confirmation. It's a sign that we are likely to go bearish. But if it trades to take out the low of this candle, okay, then we have
Okay.
change of character, and we would expect a pullback into this area again, and then see if price will give us break of structure. So once that is going to happen, where will be the target? Any liquidity resting below or below will be the target, and that will be this fair value gap area that was already that price tapped
Okay.
into. Okay, so notice this candle was very big. Okay, price tapped into like half of it, like 50% of it. I can use the Fibonacci to measure. So from this area into this area, price tap into like it's more than 50%, but it's like 61%, something like that. So price tapped into that area and rejected. You see, quickly it pushed up and closed above. Okay. So
Okay.
it's likely that price will be drawn to this low here, this liquidity, this price. That is if we see this change of character at the top here. Okay.
Okay.
So if that is going to happen, then we will expect price to likely sweep this liquidity and tap into this support area or demand zone here. Okay. Tap
Okay.
into this area like order block area. If price does not buy from here, if this happens and price does not buy or go bullish from here, then we have to still look down because market draws to where there is money, where there is liquidity, where there is imbalances. So
Exactly.
we have to look down. Is there any reason why price will come down more? There are these wicks here, which is liquidity. And then when
Mhm.
price took off from this area to there was a space, which is a fair value gap created around this low here. There's a space here. Okay. So this area of imbalance will be a target for price to come to because notice it has not been mitigated. Okay. So if we don't see the buy from this demand zone here, then it's likely price will trade into this area and then we see what will happen in this zone. The other thing is that so we have to also look at, do we have a range right now? I can see that we have a dealing range, like a range that we can use to determine the context for our trade. We have this high here, and then we have this low below here. So we can use our Fibonacci to measure from this low because the buy started from here up to this high, like this, and then see if price is to pull back, where will it draw to? So mostly I would expect a pullback into a discount zone before I buy again. So where is discount zone? The discount zone is inside. Um, okay, let me
Maybe the 50 or 61 or 78.
what
For the
uh
discount zone,
yeah, so discount zone is anything below 50%. Okay,
50%,
so
that is
50%
61.
is like half, like equilibrium, like
Yes,
and then
yes.
anything below that is 61, 78, 88,
Oh, yes.
80,
And the
all
78
of
is where we have 78, we have a
yeah,
fair
78 is
value
where
gap
we have
very
that
close.
fair value gap down there, and then 61% is
Mm.
that block, okay, or that block of
Yes.
demand zone, liquidity area. So all those areas are places that or zones that we could expect. And then even on the 50% on the equilibrium is, you see, when 50% is area, around that area, if prices to trade into this area, one, it will sweep this low, which is liquidity, and fully fill the fair value gap, the earlier fair value gap. Okay, and that is also a very good area that price can push to the upside. Notice this is a daily time frame. Okay, so if price is to take this liquidity, there is definitely going to be a pullback. So we can even also join a buy from this area in case price draws into this zone. We can buy from somewhere here, but we have to have confirmation on lower time frames to be able to do this thing.
Exactly.
So this is
Exactly.
the context and the different assumptions or expectations that we could uh, have on the pair. So, with that said, um, can we be able to find any confirmation? So, right now, what do we do? We can't sit down. Okay, one, we can sit and wait till we see things happening. Then we will react. That is one thing we can
Then
do.
looking
Two,
at 4 hour,
yeah,
looking at
two,
4 hour.
we can also go on the lower time frame, like 4 hour, 8 hour, and see if we can even find sales. That is, if we find confirmation that we should be going bearish. But what I would do personally first is to check the 8 hours. Okay, so to
Okay.
check 8 hours, we should also see on the 8 hours a swing high being formed. Okay, so on the 8 hours, let's notice that there was this previous highs resting here, and those previous highs were swept out, were taken out. Okay, so anytime a previous all-time or swing high is taken out, there is a likelihood that there will be a pullback. Okay, there is a higher probability when swing highs are taken out that there will be pullbacks. So this swing high was taken out by this guy, this move to the upside, and it has created or given us another swing high on the 8 hours. Notice we have a high here, we have a higher high, and then a lower high. And this bearish candle traded to take out the low of this bearish candle, and the body of the candle pushed back into it to close inside. But the wick closed below. That is a
Yeah.
sign of a break. Okay, on the lower time frame, it's a break. Okay, it's a change of character, just that the body closed inside. Okay, so the body closing inside is a sign that the pattern is not or is not ready, it's not formed yet, and that's why we have this new candle even trading to give us another break. I don't know if you can see all that. That also broke
Yes.
or traded down to give us another break. It broke it, but still quickly pushed to the upside to take out this high. So what is the meaning of that? Price took out this low, price took out this low, and quickly rejected to the upside to take out this high. So it's very likely this candle might close below this bearish candle. If it closes below anywhere here, we should sell. If it closes below this bearish candle, if the body closes. So what is the time now? Now let's see the
I
time.
think
My time is 7:59. So
this is
8 hour candle. If we are talking of an 8 hour candle,
almost 3 years.
yeah, so we have like 3 hours for this candle, or probably 2 hours. Yeah, we have like 2 hours for this candle to close. Okay, we have
That
2 hours.
that will be around 5 p.m.
Yes,
right
we have
here.
yes, we have 2 hours for this candle to close. So if it closes bearish or below this area, even if it closes as a doji, it will still be something good to help the sell. But if it closes bearish, then we have a good confirmation on 8 hours to go bearish. Do you get it? Okay, so
Alright.
now we have to also, then from here, we have to move into 4 hours. I will move into the 4 hours to see what is happening. Let's notice on the 4 hours, there is still the pattern, a high, a higher high, and then a lower high. Notice that this area zone here has not been invalidated. Price hasn't traded above it or hasn't swept it. It's just retesting. So we are good. The pattern is still valid. And um, notice that there is this 4 hour candle which will be closing in the next like 2 hours. That is engulfing. Okay, that is
Yes.
engulfing this area. So even within this pattern, we still have like another swing high, a higher high, and then a lower high here. So once this candle closes below this mid candle here, this once this 4 hour candle closes below or engulfs it, closes below and closes somewhere here or here, we are good to go. Okay, we are good to go.
Exactly.
We can make some good money on this pair today. Good.
Exactly.
So it's forming. Then from 4 hours, let's look at 1 hour and see what is happening. So on the 1 hour, things have fallen in place nicely. Okay, so things are falling in place nicely. So we can see still, we can see the swing pattern here, retested and drop down. We can see a new swing pattern that has been also formed on the on this side, and then price is dropping. So what about 15 minutes and 30 minutes? So on 15 minutes, now this is where the magic will happen. So on 15 minutes, yesterday I took this trade. So what I saw yesterday was that on the 15 minutes, I saw that price has price from we had this previous highs here, which price dropped, gave us this low and pushed to the upside to take out that high. So
Exactly.
this is a high and then a higher high. Okay. Then it impulsively drops to the downside and then took out this low. This for me was a break on the 15 minutes. A break, okay, of structure was a break. So once this happens, what do I expect? I have to look for I have to look for imbalances, okay, imbalances from the impulsive move to the downside, and then find an entry targeting this previous low, this area. So yesterday, if you check it well, the pattern well, you see that within here there is a fair value gap. So there is this low and then this high. So this space, so price first traded into this fair value gap. Notice there is another fair value gap at the top here. Okay, so there are two fair value gaps. Which one do you choose? Okay, so for me, what I did yesterday was I used this high and then
Okay.
this low as my context because this price action wasn't around yesterday. It wasn't here yesterday. So
Yes.
I used this. The meeting will close in 10 minutes. I use this as my context. So then I would use my Fibonacci to measure from the top to the low and then see. So notice that the first fair value gap falls inside 61.8%. So at this area is a premium area. It's above equilibrium and you can sell. If you sold from here, you would have made profit up to this area. Your target will be the
Exactly.
low, but notice it did not give you that target. It
Okay.
gave you, let's say, half of the profit, okay, on the 15 minutes. So that was good.
Mhm.
That's good. You can use this to make some $10 or $20, depending on your loss size and what you want to risk. But I
Mhm.
did not take this entry. I waited for the fair value gap at the top. Okay, so I was still waiting, and price pushed up into 78.6% this area, and that's where I took my entry. That's where I took my entry. Okay, so notice that setup, I had that setup yesterday. Did I share it in our group? Did I
No, I
share it?
don't think
Yeah, I shared it. This is it.
you did not share.
Can you
Oh,
see
okay. That means the trade is
screen?
strong. Yes, I
Yeah.
can.
So I shared it, the setup. So I took the entry from here and it gave me about 50, $60. Okay.
Wow.
So I made about 50, $60 from here to down here. Okay. And then I closed my trades and I left one position and I set a stop loss and I slept. So notice it dropped, and then moved to the upside. When it moved to the upside to retest here today, over the night, it stopped me out. Okay. So, but
Oh,
right now, the same scenario that formed here seems like has also formed within in this place. So we still have a low here. We have a low here, which also broke structure. And notice from the top-down analysis we are doing, we are expecting price to go bearish to close below. So we have a low here and we have a high here. So what are the imbalances within this range? So if you use your fib to measure like this, I can see that price traded into this guy, this fair value gap, which is on, okay, so let me put it. Uh, yeah, I think I can measure it from this place to this area. So price traded into this fair value gap at the upside here. Okay, this way it traded into and then dropped. Notice as it is dropping, it is breaking structure again. Okay, it pushed up,
right.
dropped, breaking structure. So breaking this low. Okay, so if it perfectly breaks this low, I would expect another pullback, but probably maybe I might not expect a pullback that will take out this high. Maybe I might not. Maybe I will expect a pullback that will come to equilibrium, like 50% here or 38%,
Okay.
and then I will enter my trade.
Okay.
So I might enter my trade, uh, and we might enter a new sell somewhere around here. And still our stop loss is going to be the high, very big. But that's why, and then we'll target price closing here in the next 2 hours. So if price closes below, then we are good to go. Because that means on the 8 hour and 4 hour, we will have that confirmation we need to go bearish. Do you see how all is adding up?
Mm-hmm.
Perfect. We will have that
Okay.
confirmation that we need in order to go bearish. So the entry that I can envision might be around an entry around this zone. Stop loss is above. If price still trades into this stop loss area, that's perfectly fine. Okay, maybe I can add, just take one position. If it trades into the top here, this is not advisable, but you can still do it. You add multiple, like maybe one or two other position if you have the capital. Okay, because in this range we still have 78. We still have uh we still have 78.6% area. Yes, at the top here. Okay, at the top here. We still have it here. We just had 61.8%. So it's likely price might want to manipulate to the upside. Okay, so let's see what is going to happen. And then if we are taking this self around this area, where is our target going to be? We are coming long. So what is the risk to reward? We are coming to that liquidity, okay, that fair value gap that we identified. We are targeting this area. So what is the risk to reward ratio? So you can enter just one position and leave it for the next 8 hours or 4 hours and see what will happen. You make a lot of money from this.
A
So,
lot of
but
stuff.
until price sweeps up here, we are good. If it takes all these ones out, then it means at this stage we have accepted that our analysis is wrong. That is the meaning of stop loss.
Exactly.
So you only risk the money you are willing to use the money you are willing to lose to take this trade. If you are not willing to lose the money, you don't trade. You don't trade.
That is what for it.
And you have to be monitoring your trade to see if it's going into a loss that you cannot afford, you close it and leave. But you have to be
Close it and
strong
do.
mentally, emotionally, psychologically in order to be a
That thing
trader.
is basically affecting me sometimes. There
Yeah,
are
it can
some,
affect
there are some
everyone.
good markets. There are some good markets that would have at least sometimes, it will be going in that little loss. And, we will not be able to stand it. We'll just close it. And it will end up going our direction.
Yes.
Based
Yeah,
on
so let's be
what we
monitoring this
realize.
setup. Let me take a snapshot of this setup and then let me post it.
Okay.
Let me post it. So anticipation, sell, sorry, sell anticipation on 50 index. So let's see if it will work out. Um, so let's go straight to gold, but the meeting is going to end in 10 minutes, in like 2 minutes. If it ends, I'll send a new link so that we will all join
Okay.
again and then we will analyze gold and Euro USD. So I'm
Okay.
expecting a pullback on gold at New York session. The session is already open, but I'm expecting a pullback into this area of imbalance so that I can sell. So let's see if I can, yeah, so that we will do a full analysis of the gold chart and see what to expect for the rest of the week. Um,
Okay.
Yeah, so now we have 50 index set up. We have what we are expecting. We are just targeting this area. So let me measure here, at least from this liquidity area to here. Yes, if we can expect at least 78%, maybe we shouldn't take all the profit. Let's take up to 78.6, 78.6% here. So maybe you enter 2 or 3 positions. If it breaks down to 50, 61%, you can close two and leave one. That's what I normally
Okay.
do. That's what I normally do. Because sometimes a little pullback, you might be shaking and you end up closing and price will
You will
keep
end up going
going.
your way.
Uh-huh.
And V50 is a bit volatile when it's going against you.
Mhm. So let's quickly check out on the 51s setup to and see. Good. So the setup is forming. Yesterday it gave this leg nicely, and today it has retraced back to discount. So let's see what were we looking for? I was looking for a break of structure on 5 minutes or 15 minutes in order to take an entry.